of nature like pandemics or climate disasters, and technology changes. Here with us now exclusively at Post 9 to talk more about how he is viewing the world right now through this framework is Ray Dalio. It's always a pleasure. Thank you for taking the time.
It's always a pleasure.
I wanted to ask you about the market and the war because stocks are now 4%, the S&P, higher than before the war started. Oil prices are almost 50% higher from before the war started. Do you think it makes sense how the market is viewing this?
Yeah, I think it makes sense.
Why?
Okay, I think it makes sense because, you know, having studied a lot of wars and even been trading through some of them, what matters is earnings. What matters is the country, you know, in other words, how things are going. Earnings have been extremely strong, right? So through all of my times, it won't affect the markets for on a sustained basis unless it affects the earnings and affects the cash flows. Everything's a present value of the future cash flows, and the earnings have been great. But of course, the world is changing very quickly in terms of money, how the money's flowing.
Yeah.
For example, you know, who's benefiting, who's not benefiting, the changes in wealth.
Well,
not just the war, the whole change. Like, for example, China has been exporting a huge amount of money and earning a huge amount of money. So if you look at think about that, how much money that's been accumulated. They have to buy things. They could either buy financial assets or they can buy goods and services and so on, but huge change in earnings. The Middle East countries are having issues with their income. They have a lot of money, but how that money is moving around, even the issue of what is money, you know, the question of what is transactions now are increasing in renminbi, and what do you store money in? So these things are changing at a very fast pace.
So this is
but
something
it's financial,
we don't talk as much
you know.
about.
In other words, still, as long as you can take a lump sum payment for a future cash flow, it's the future cash flow that's going to matter.
Do you think that this war accelerates the decline of use of U.S. dollars? Is that what you're saying?
The war accelerating?
The decline in use of U.S. dollars?
It's changing the use of U.S. dollars, right? Because there's this war conflict, and that also means for countries that might get sanctioned and also trade. Right now, I think what's happening is there's the question all around the world is what's the U.S. power? Is the U.S. going to win this? And what does win it? Win it means who will control the Strait of Hormuz, and what does that mean for asset prices and assets, and what money's stored in. The most important thing is debt and money, right? In other words, that's when we talk about a reserve currency. It means holding that debt. So there are debt issues. We talked about those. There are a lot of debt issues domestically, but there's also where is the safe money, or what is it transacting in? You know, is it transacting in renminbi, Chinese renminbi, or not? Now, the transactions for renminbi have been increasing at a fast rate. You're not going to get, though, China money, China's debt being held as a safe haven for assets, because as a storehold of wealth, it's a very risky storehold of wealth.
We're still the main game in town.
Okay, but there is a big change in who has the money, who's earning what in the world, and how those monies are going to flow. The energy picture is also interesting. Well, you know, right now, oil accounts for about 4% of world GDP. During the prior oil shocks, it was 10% of world GDP, right? So the impact is different. Also, there are many other energy sources. Oil used to be it, but now we're seeing a lot of changes in terms of, you know, solar and other energy sources. So like in Asia, you're seeing a lot of adjustments, permanent adjustments, as to where that energy is going to come from. So 6%, let's say of China, 6% of energy imports is oil from the Middle East, even though it's the dominant buyer from Iran. So you're seeing these very dramatic, interesting changes that are permanent changes. In other words, they're not going to go back to what they were before, where in other words, the oil is flowing again.
Yeah.
And the oil has to get flowing again, because if the oil doesn't get flowing again, then the repercussions for a longer period are a problem. So in terms of like the future, think about the summer. I mean, people travel, okay, airlines and so on. So there are these big disruptions, but there are big efficiencies that are also taking place. I think the biggest issue is what is the power of the United States as a world empire, as a world force.
Superpower.
A superpower, because in Asia, I traveled around to a number of the countries, and not just Asia, but in the Middle East and other places. The question is the United States going to win, be a dominant power? This is a medium power. Can it win that, or can it not? And that's causing leaders in different countries to think differently about not only their economics, but what is a base there for? Is a base there to protect them, because that was part of a treaty, in a sense that I have the base there and I have American protections? Anyway, there are all those issues.
How do you think about it? I mean, do you think that this war strengthens the U.S. in that regard, or ultimately weakens it?
Right now, it's a problem.
For the U.S.?
Right now, it's a problem. Yes, it's a problem because others. I'll just pass along what other leaders in different parts of the country. Can the United States fight a war? Will too high gas prices? The war has to be over in weeks. Too high gas prices,
pressure,
and you can't lose anybody in the war. Okay, so it takes more than that to fight a war. So what does that mean in terms of defense and so on? When that starts to shift and these things start to change, it's concerning.
So ultimately, I mean, a lot of people view this, certainly the administration, I think, views this as a stabilizing force for the Middle East, for the Gulf region, somewhere where you spend a lot of time. We've seen each other in Riyadh and UAE. Do you see it that way?
I think the question is, who controls the Strait of Hormuz, and what happens to the nuclear program?
And that will determine whether the U.S. wins.
It's almost like these are the things that check it. There's also the question of the missiles. Okay, if you were to add three things, if you go check, 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 they're taken care of, then that's considered a clear win. Okay, the more checks that are missing, particularly who controls the Strait of Hormuz, has big implications. Because it not only there, but I just want to re-emphasize, it has implications all around the world. So when you're thinking about, let's say, the Strait of Malacca, okay, and who controls that? And is it good as a benefit or not a benefit to have a military base in your country that is related to that? Those analogous questions are being looked at by people around. So you want to come out of this with a win, and it's not easy to come out of it with a win.
So as an investor, Ray, I mean, you mentioned short term, you think about earnings, right? You think about the economic impact. Long term, though, the structural changes that you're talking about that are being put into place, what sort of opportunities are there out there for investors around
I think you have to really get down to the thing. You know, what investment? What's the present value of cash flows? What does that mean? Okay, so now when we go above what's going on and we see it in a bigger picture way, there is this arc, the five forces that you mentioned. How are we doing with debt and money? Okay, you have to be financially strong. Second, how are we doing with internal conflict, the left and the right? That has implications in terms of the democracy and how it works, large wealth and values gaps causing conflicts where there are irreconcilable differences. And then there's the question of even violence. As we come into the midterm elections, we're going to come into midterm elections. It's probable that the Republicans will lose the House. Okay, if that happens, that's going to intensify the fights in many ways.
And I'm thinking of this weekend being in Washington.
And gun violence, of course. And then we have this we've changed the international world order because we've gone from a multilateral rule-based order to a might is right fighting order. And so how are disagreements resolved? There's no court you go to, it's tests of power. So we have that dynamic. And of course, technology, AI, wow, fantastic benefits and then fantastic risks okay, associated with it. So what we have is a very fragmented, a great change. So you can see the composition of the markets, right? Those that are going like that, those that are going like that with this great change. And so the question is how to play that, right? The key, I think, is to know how to have balance and diversification because of what is unknown and because of the associated risk. And so that create that portfolio that has the right balance, okay?
Including gold,
and then pay attention to some of the risks that are typical in this part of the cycle when there's not enough money and there's great conflict, okay? Those could be foreign exchange controls. Those could be, think about changes in taxes and all of that. That's all part of the game, that we have to play.
Have you changed the way you think about the allocation of gold?
No, I think the allocation of gold, I think it's important to understand that gold is a type of money. It's the oldest kind of money. It's the second largest reserve currency of central banks. Okay, the dollar, gold, then the euro, then the yen, and so on. And it has a unique purpose. It's not a fiat currency. So when you look at a portfolio construction, and you say, what should you have as that? It's a very effective diversifier because when you have conditions that are really bad for the ordinary financial assets, an optimizer would put between 5 and 15% of a portfolio into gold. Okay, everybody would have between 5 and 15 for a efficient portfolio because of the diversification impacts. And it's particularly, this is an environment that lends itself to gold. So the question isn't to market time this thing. I think people make the mistake of looking at each piece of their portfolio and they try to market time it. Oh, do I get into now the stock market and I pull it out and what do I move? And they're no good at that. That is not the right way to do it. Even most professionals have problems with doing that. So what they should do is they should have a strategic asset allocation mix that is balanced, highly diversified, and yes, would include between 5 and 15% in gold.
We are expecting Kevin Warsh to be confirmed and the next Fed chair by potentially the next Fed meeting. Would it be a mistake for him to cut interest rates in this environment?
Yeah, in my opinion, it certainly would.
Why? Because of oil prices?
Well, because of the issues that are here in terms of a more immediate inflation, farther from the target in terms of inflation target, and also the credibility that everybody's going to look at how he behaves in terms of monetary policy. So if you were to take and ask that question to almost anybody who's objective, they would say, certainly you would not cut interest rates now, okay? You will lose your credibility. The Federal Reserve would lose its credibility, particularly now, almost at any time. And so I would say, but beyond that, it's not the right way to have monetary policy, given all things considered.
Why? He should wait till when?
Well, you have a dual mandate, right? You're in a stagflationary period. We're in a stagflationary period.
Do you think we are?
We are certainly in the stagflationary period. Now, how that transpires has a lot of parts to it, but we certainly are in that. And if you look at monetary policies by other countries, you're not going to see them cutting. Okay, so whatever your benchmarks are, you're not going to be inclined to cut the monetary policies, not with today's information.
Right, until either inflation comes down to target or unemployment weakens, I guess.
Right, right. Those are the signals.
Yeah.
Okay.
Well, are you an AI optimist or pessimist?
I'm thrilled about AI. What AI is doing for me, and through my 50 years of building Bridgewater, the way I did it was to have decision rules programmed into computers, and so the computer would make decisions. And so I've systemized it. Now I'm able to go way beyond that with AI. I'm thrilled. I think you will either be on the crest of the wave, that tip of the wave, or you're going to be drowning behind AI. So I'm an optimist in terms of what it can do for me and what it can do for others.
What about the economy?
At the same time, okay, what it's going to, as a force, there are a number of forces that are operating. There's that force, other forces. But let's say the AI force, okay, that is going to enhance productivity. That can bring costs down with a longer period of time. It's going to bring jobs down a lot, okay? It is causing a huge wealth gap. And how that wealth gap is going to play out is going to be important. For example, wealth taxes, okay? Wealth taxes can be a bubble popper because, there's wealth is different from money. Okay, there can be accumulating all that wealth, but you can't spend wealth. You have to sell wealth to get money in order to spend money. And so when you have, in the bubbles in the past, when there's a lot of wealth and there's a need for money, quite often for debt service payments and the like, then people then have to sell some of that wealth. But now you have wealth tax question. It's causing people to move from different states and other issues. So these taxation will play an important role. These things I think are going to intensify and be, come into it. But anyway, back to AI, I think it'll be a wealth gap producer. It is a wealth gap producer. So the question still is, how do you distribute the wealth? And how do you distribute the benefits of the wealth, like education? Do you know that 60% of Americans have below a 6th grade reading level?
Yeah, it's depressing.
So how do you make that population productive? And if you don't make that population productive, there's a great clash.
But not with a wealth tax, you're saying?
But okay, so there are things that could be done. We won't have the time to do that, but none of them is perfect, right? It's a basic thing. The basic thing is, if you borrow money, you have to pay it back. And that produces a cyclical effect. The government is spending $7 trillion a year, takes in $5 trillion a year. So it has a $2 trillion deficit. And so 40% more, spending 40% more than it's taking in. It's built up a big debt. They're going to have to sell that debt. Okay, these are issues. They're real issues, indisputably real issues. So you have to bring it back to what are the basics, and it's not politically. It's a problem. Yeah. I go to Washington. I speak with people, top people on both sides, and the emphasis, the answer is it's political because, like they tell me, you don't understand. You have to make one or two pledges to the American people. The pledge is, I will not raise your taxes, or I will not cut your benefits. And so we have to deal with this. This
is the debt crisis that you've been worrying about for a long time.
Yes, and it's worsened by the supply-demand situation by what is your storehold of wealth. In other words,
there's still plenty of demand for treasuries.
The demand for treasuries is largely coming internally and changing the supply-demand balance. It is declining internationally, and so anyway, that's a whole other subject. But anyway, there are those five forces. And there are these issues, and I think if we could deal with them, logically, mechanically, and so on, we could do. We could deal, but they're difficult problems, right?
But it's almost like history repeats itself.
It does rhyme.
Thank you, Ray. It's good to catch up with you, get your thoughts on all of this.
It's always a pleasure.
Thank you. That is Ray Dalio, founder of Bridgewater. Mike.
All right, still ahead, the trial for Elon Musk's lawsuit against OpenAI beginning this hour. We're live outside the courthouse next. Plus, some of the biggest pharma companies believe they may have discovered a major breakthrough when it comes to preventing heart attacks. That story when we come right back.